Welcome, everyone. This is Gary Carpenter with Prepare for College. And again, we've got another exciting podcast here. Today, we're going to talk about a variety of things. I'm going to talk a little bit about family income and what to expect in this new and challenging world of college financial planning. And Al's going to jump on also and give his view on his side here. But before we do, I want to give you a little background. Chuck here is going to give us a little information as to what we're going to cover today. So, Chuck, I'm going to pass it over to you.
All right, thank you, Gary. Families across the country are about to feel the impact of something that's happening behind the scenes in Washington, D.C., and a lot of it was due to the big, beautiful bill. The federal government is cutting back on how much money it gives out to help students pay for college. And those cuts could make college more expensive for everyone, especially for low and middle income students that Gary and Al will cover. Now, a lot of the financial aid officers, people who work for colleges to help families get financial aid help, are sounding an alarm. Whether or not it's justified or not, we'll soon find out. They say the government is cutting funding to programs that help students the most, which includes individual students receiving a Pell Grant, which is money given to low-income students that don't have to repay the grant back. It also is going to affect the federal student loans that we've covered a little bit in other podcasts, especially for graduates and students' parents. The next one that's going to be affected is the TRIO programs. Now, a lot of you are not familiar with the TRIO programs, but this program, it basically helps first-generation students, low-income students, and students with disability getting into college and succeeding in college. Some of those benefits are also going to be going away. So at this time, the colleges are losing money in other areas like financial research grants, and in some states, state budget cuts are making things even worse. All of this means is that schools may have to have less money to offer students, and families may be expected to come up with some additional funds directly out of their pocket. So that's a general background of what we're going to be covering today. So I'm going to go ahead now and turn it over to Gary, and he's going to be covering different income levels. So Gary, take it away.
Thank you, Chuck. Well, folks, it's been an exciting summer so far, and it's going to get a lot more exciting. And I just want to go over some different income levels so you know what's going to be ahead of you as you move forward into this college financial arena. Let's look at three different types of income. And the first one is low-income families. Well, how has this bill and the actions in DC affected the family? Well, they've affected them substantially. If your income's under $50,000, your child could qualify for Pell Grant, okay, in the past. Now, there's also a section in there if the child qualifies for free tuition for college, and that could be a community college or a public university, and this could be offered by the states or by the universities themselves. If they qualify for that, they're not going to get the Pell Grant, even though they meet all the other qualifications. Now, why is that such a problem? Well, you could use a Pell Grant to pay for books, meals, transportation, even housing, where the scholarships from colleges are not scholarships. These grants or programs for colleges that offer free tuition, that's all they do is the tuition's free. All the other expenses are yours. So again, they've given you something, but also they've taken something away. You need to be aware of that.
Real quick on that, like a program down in Tennessee, they provide a free community college tuition. So what you're saying here is that if the individual parents or students qualify for a Pell Grant and they qualify for a program that is like what is in Tennessee, that they normally in the past could use that Pell Grant to purchase their books and meals and transportation and housing and such like that. Under this new ruling, those individual students will not get the Pell Grant because the state is basically paying for the tuition. Is that what you're telling us?
Absolutely right. And this is going to be a big hit to families in the low income area that in the past have been able to qualify for both of those programs. Now, by qualifying for one of them, they're going to lose another. So it's important that you know about this. There's another item called trial program. Now, Chuck called it trial. I call it trio. Okay. But for whatever you call it, it's TRIO programs. And these have been cut for families that have students going to school for the first time. In other words, no other member of the family has attended college. So this program could provide tuition tutoring, college prep programs, and other supports that the student needs to go off to college. And these are primarily first-time students going to their first year in college. So it's a support program. That program's not available anymore. Let's move on to middle-income families, and these are families that are making between $50,000 and $150,000. Now they're going to qualify for some federal aid, but it's also going to have an impact on the colleges. And what I mean by that is colleges are losing government-funded programs for research or for support, whatever. These programs are being slashed and no longer available to the schools. How does that impact you? Well, that scholarship or that grant or that federal money that might be given to the colleges to help students, they no longer have it. So they're not going to be able to offer those programs as they have in the past. And I've seen some situations where, especially for graduate students, earlier this year in February, students that were in graduate school were given award letters. They had a solid basis which they could plan how they were going to fund from school. And at the end of February, the government pulled the programs that were funding those grants and scholarships. And the colleges had to go back and either rescind the programs in total or tell some students even that instead of maybe taking 15 for a specific program this year, they had to cut it back to 8. So those other students would have to reapply, but they had not been funded at all. So again, something you need to be aware of. Now, high-income families. If the family earns more than $150,000, you're not going to get need-based aid, but families do count on merit scholarships. And these are awards for good grades, test scores, special talents like drama, acting, even athletics, okay? And which the colleges could use money from their own endowments to help fund these merit scholarships. Well, two things have happened in that area. This present bill that's come through has proposed a tax on colleges' endowments. Now, it's not all colleges, but the very wealthy colleges that have large endowments are possibly going to have to pay a tax on their endowment if they don't use their funds in a certain way. Well, if that happens, this is going to reduce monies available for merit aid or merit scholarships. So you're going to see less merit scholarships for wealthier families. At the same time, schools are moving their strategies as far as who they're recruiting. They're looking now at families that can afford or will be paying a full price with no grants or scholarships at all. And they're also looking at international students. But as everybody knows, that can be a problem too. That was a large source of funds for colleges in the past. Now that source it's still there, but it's questionable as far as who's going to take advantage of it as far as an international student. Chuck, that's about all I've got right now. Any questions?
Yeah, I've got one here. With these cuts that are coming in and the availability of using the Pell Grants or any other type of need-based free money or things along those lines, I have done a lot of research on this. I've gone through the bill and tried to find this answer to this question. What if the parents or the student were to receive the American Opportunity Tax Credit and the Lifetime Learning Tax Credit? Does these things or the cuts that they're making here, is that going to include those tax credits? I couldn't find anything in the bill, so I'm assuming, since it's such uncertainty here, that the tax credits are not going to affect their availability of receiving, let's say, a Pell Grant or whatever. Have you seen anything under that beautiful bill that mentioned anything along those lines?
I'm going to make life a lot easier for you. First of all, that big, beautiful bill, the official name of the bill in Congress is either big, great, big, beautiful bill or HR 1. So we're going to call it HR 1. That's a lot.
HR 1, okay.
Okay. Now, back to your question. I haven't seen anything to date that has impacted those credits. So I'm working on the premise right now that the American Opportunity Tax Credit and the Lifetime Learning Credit are still available to families that qualify for it. Keep tuned because things could change between now and the end of the year. Congress and the
how these bills are written. They've got underlying things in there to where if they were to receive the American Opportunity Tax Credit or the Lifetime Learning Tax Credit, right now we're uncertain whether or not they would be able to also receive the Pell Grants and things like that. So if we do find some new information coming out, we'll make sure that everybody knows it. So, Al, I'm going to go ahead and change it over to you, and you can tell us what's going to happen next.
Well, a couple of points that not necessarily a question, but just comments. The Pell Grant. Let's go back to that for a second. Interesting is that the Pell Grant works off of a starting point of your AGI, which you wouldn't necessarily know. This Gary does. He's an accountant type person. Well, that's line 11. So that on your 1040. So that's the starting point. If that income is less than that, 50,000 that Gary mentioned, that is the line 11, your adjusted gross income. So it doesn't really matter if you get the tax credit. It doesn't matter because see, it starts with the adjusted gross income. So the rest of those situations, I love going through this. This may happen. This might happen. This could happen. There is so much to be learned here over the next probably 3 years as to how the colleges will run their businesses. The part that I want to make sure that you all realize is that colleges are businesses first and benevolent associations of higher learning second. Now, this is a little bit sarcastic in that, but at the same time, that's the truth. They still have to pay their bills just like you and I do. So how they're going to do that and what's going to affect the operational status of this money or that money is going to be hard to predict accurately. We can postulate, which is what we've done today. But, what can you do? Well, what can you do is, first of all, make sure that affordability is part of your decision-making process for a college. Affordability is long been ignored by certain circles in the educational industry as a reason why not or why to go to a college. So I believe that affordability has to be in that college convo that you have with your child. And by the way, you should have one. It should probably be may I suggest, September of every year for the freshman, sophomore, junior, and senior year, so that you can make sure that your student knows that you're going to do everything that you can to make sure that they get a chance for a good college education. It's an excellent kickstart, and I truly believe in education big time. But I also believe in the fact of affordability. There's a reason why there's not a Tesla in my garage, and there's a pickup truck, and that's because I can't afford the Tesla. So if you can't afford that college that you got into, and I mean, this is sad, but I'll use an extreme example. If you got into Harvard, but you can't afford to go, gosh, you don't go. It's sad, but it's the truth. I also believe that the more work can be done, and it is work, and work's a four-letter word, if I can intone that, for outside scholarships. Outside scholarships will well, I shouldn't say will. Outside scholarships, the potential there is to come up with a lot of money, but you're looking at a serious work effort. I mean, 400, 500 hours of time in that junior and senior year each to come up with some outside scholarships from nonprofit religious groups, employers, and local businesses. The part that's in the national databases are the national scholarships, but stay focused on your neck of the woods. What's in your backyard? For instance, there's a VFW post here locally in my city that has an award, a patriotism award, for just $1,000. That's not a lot of money, but that's a lot of money. I say it's not a lot of money when you talk about a college that's costing 80, but it is a lot of money just the same. And that's not listed in any national merit scholarship databases. So those regional scholarships. So stay focused to your neck of the woods, particularly if you have a high-end Fortune 500 company in your backyard, like I do here. So outside scholarships, and have a backup plan. I mean, this is not going to go over well, but you may have to go to a community college. Now, the trick to doing this properly is say, okay, where do I want to eventually graduate from? So I got to put some names behind this. I don't like to do that, but in this particular case, I kind of have to. But let's say you want to graduate from UConn, University of Connecticut. So the crown jewel. Well, you can't go to University of Connecticut because it's too expensive, but you can go to a community college where the University of Connecticut is required to accept those credits. So I can go to a community college for, gosh, $200 a credit hour, and UConn is closer to $500 a credit hour. That can save you a tremendous amount of money. It's not the, quote, college experience that you may have wanted to have, the dorms and the 4-year and whatever, all of those things that go with the 4-year experience, but it is a way to get the job done and save quite a bit of money. There is going to be loans, most likely. Just be careful that you don't borrow too much. The HR1, Gary,
Yes.
did create a limit on the PLUS loan of $65,000 over for one child, and that's not per parent. That is for the parents, plural. They can borrow $65,000. One parent can borrow 30, another can borrow 35. It's for one child. If you have two children, two twins, then 65 and 65 each. But that is maybe not enough to get to the finish line. So my point here is that don't just look at that first year of college. Look at the 4 years. What's the cost going to be for all 4 years? You want to get to the finish line. That degree is worth its weight in gold. It really is. However, it is something that you have to get to. And if you could do 3 years of college, but you can't afford the fourth, you didn't get there. So that's where you have to be proactive in your planning on some of the things that I just mentioned. I don't know, pay attention because some of these things have a reaction. For instance, for years, the FAFSA did not count the assets of a small business or a small farm. And then with the new simplified FAFSA, they brought that in where they did count the assets. But the blowback was so extreme that they took it back out on this HR 1. So things can happen rapidly when it's a particularly unhappy part of the process that is affecting a lot of people and a lot of votes, therefore. So this HR 1 has been passed. It's going to now resolve itself as it works its way through the business practices of these colleges. And as these colleges and those business practices play out, there could be some very, very strong pushback by the colleges on certain avenues that have been put in the way of getting this education. For instance, the Pell Grant. I really don't particularly care about that one. I like the Pell Grant to be available for those books and fees, etc. But that's one that I think might be revised. And by revised, I mean quick. Okay, next year. So keep an eye out for podcasts like ours. And of course, you'll see these articles come out in the in Education Chronicles and in places like this. And of course, our podcast, we will be always up on these things as well. So stay tuned for us as we will keep you abreast. But right now, it just takes some good financial planning, and financial planning not with a financial planner, but financial planning from the standpoint of the student and the parents being on the same page. And working hard for those things, particularly the outside scholarships, and the keeping your ear to the ground on any changes, because I think there's going to be some changes to HR 1 as time goes by. Gary, that's a little op-ed from my standpoint. I really I didn't give any direct, this is what to do, but this is what to think about it and to consider. But anyway, it's a good topic, and it's one that it requires communication to do it right. Gary?
But
Thank you, Al.
one thing before we turn it over to Gary, I've got to emphasize here that this is a time of change and uncertainty in college financial aid procedures. And what every family should be asking, they should be asking a lot of questions and double checking aid offers and planning for the possibility that they may need to pay more towards your kid's college education. Now, this might feel overwhelming for a lot of the listeners on this podcast, but you're not alone. Help is available, and being informed in the first place, or the first step, is to be informed and to protect your child's college future. And we'll be updating these podcasts on new developments and such. So this is a real good source for a lot of the individual parents out there that are listening to this podcast, and they can spread the word. So I'm going to turn it now back over to Gary and let him close things out.
Thank you, Chuck. Well, you've had an exciting podcast with us here today. We brought you a lot of exciting, positive news that just making you jump up and down. Okay. So if you think this is good, wait till next week. It's going to be even better. So again, this is recorded. It's on our website, and that's prepare4college.com. And I'd like to just say in closing here, if you have family members that are looking at college, or you have friends who have children that are going to be looking at college, share the website with them. There's going to be some good basic information in there for them, so they can at least get an understanding of what's going on and where they should be paying attention. So with that, I'm going to close up for this week. Everyone have a good week, and we'll see you next week. Bye-bye now.